Hi, everyone. All right. I hope you all had a nice dinner. Good swimming. A few of you. Good ping pong. Today we are going to take a look at a few things. We're going to take a look at opening your new investment accounts, right? So we've been talking a lot about how to invest, or what kind of mindset should we have while investing. We'll try to actually open investment accounts, and I'll suggest 4 or 5 different platforms. You can pick and choose whichever one you want. The first question for all of you: who already has an investment account today opened? 1, 2, 3, 4, 5. Okay. So everybody else, do you have any IRA accounts open or 401k accounts? Okay, wonderful. So I hope this is going to be helpful. So we're going to actually go ahead and open a few accounts. What we're going to take a look at is how to set up automatic recurring purchases of individual stocks, or how can we put money into the accounts on a recurring basis, right? So that it happens a little bit more automatic. We don't need to remember about doing it. And that also will help. It helps a lot with value investing, because when you invest for the very long term and you do dollar cost average, and the less you think about it, the better it is. It happens to be that way, because if you get into it and psychologically you start thinking about whether you should keep investing more when the stocks are down, should you just sell, it usually works against you, especially with the portfolios and diversification that we are going to be taking a look at. So today we won't talk a lot about speculation stocks, or where is the next Palantir, or some other product. We will talk a lot about the ETFs, and who knows the difference between ETF and a stock? Can you raise your hand? Okay, wonderful. So I'll explain that difference. I don't have a whiteboard today with me, so I'll try to do a digital whiteboarding, because I think that's going to be very helpful to actually understand, why are the ETFs exist, what is the mutual funds, what are the rates, what are those things. So we'll talk a lot about that. I think the next class, we're going to talk more about the portfolio and diversification, different types of portfolios. We'll see how far we're going to get today, okay? I don't want to overload you. As always, I do want to overload you, but I won't. But we're going to start the class, as always, with 2 things that you're very grateful for. I know you love those. We're going to take 2 minutes just to write that down quickly. Okay, moving on. So as I mentioned, today we're going to open accounts. We're going to try to make some trades. Obviously, today is Saturday, so the markets are closed. Who knows what the market hours are? When are the markets open? When can you buy shares?
New York.
9:30 New York.
9:30 a.m. until what time?
4 p.m.
4 p.m. New York time. So it's 6:30 a.m. here. It's 9:30 a.m. New York. So in New York, Monday to Friday, 9:30 a.m. to 4 p.m. That's kind of official business hours of stock exchange. That's when the most liquidity happens, the most purchasing and selling happens on the stock exchanges, and that's usually the best time for regular investors to buy or sell their shares. The reason why is because the price is not going to jump too much, because there's a lot of liquidity. It will move in pretty good pattern from minute to minute. There is such a thing as an extended hours. We'll talk a little bit about that. And then I've seen that Robinhood, actually, when I was doing that video, I was preparing for this class, and I saw that they've created a 24-hour market trading window. It's interesting. I've never seen that, to be honest, before. And I'm still interested in learning more how they did it. But I think they just, as a brokerage company, they just manage their own balance sheet, and then make sure that on Monday all goes through. I'm curious to see if the orders are actually going to fulfill, and we'll talk about that as well. Then we'll talk about how to buy, what to buy, and the stocks and ETFs and all those differences. I actually I don't have slides prepared today, so I'm gonna wing it. We're just gonna go into the material. I'm gonna share my phone. We're gonna go through the Robinhood. I'll use it as an example. please remember that it's pretty much similar with all other platforms. It's like the functionality is similar. You can make an orders for stocks and ETFs and any of those instruments. The types of orders are usually very similar as well. So yeah, without any further ado, I'm actually just gonna go back here. I'm gonna connect my phone, and we're gonna go into the Robinhood. And at this point, if you want to follow along, I would recommend you download the app. If you download the app, you'll be able to play with it yourself. So yeah, take your phones out. It could be Robinhood, could be Charles Schwab. I know some people have Fidelity. You can go on the Fidelity as well. All right. I know that Robinhood has a referral link. If you use that link, you and I will get some stock. I'm actually not going to do that. You guys just sign up yourself. You have Fidelity, right? You don't need it.
I don't need
No.
Robinhood. Okay, thank you.
Yeah, can you share us the app again?
Yes. It's on the right bottom here, Robinhood.
That's interesting. I have Ukrainian Apple ID, so I cannot download.
You cannot download it, yeah. Do you have interactive brokers on your phone?
No.
You have? Nice. Well, Alex, what do you use for investments? Do you use interactive brokers or do you use something else as well? Just that?
Yeah.
Do you like it? I used to use it at some point. Yes. Yeah.
Can you send a referral?
Yes. I don't know. Let me see where I can get it.
Yeah, sorry. Are you going to use this account or not?
I will, yeah.
Future.
Yeah.
Okay.
Yeah, I'm using it. This is a fresh start for me. I've I hope this is easier. Okay. So once you download it, it will take you through a few steps. It actually didn't take me a long time at all. It took me, I would say maybe like about 5 minutes to go through the onboarding, so to sign up and create an account, and also to connect my bank account. So once I connected bank account, I was able to set up like a recurring payments, so that every month, I think, I told it, put $200 from my bank account into the Robinhood account. But then later on, I found out something even better that I liked a lot, and we're going to talk a lot about that. So you can see that here on my screen, I have S&P 500. It says ETF, right? So I'm going to come back in a minute to the ETFs, but we are going to go and take a stock for now. Let's take a stock. I think Apple. Everybody knows Apple, or NVIDIA. No, I'm going to use your example. So here's NVIDIA stock. Okay, so what do we see here? We see today's price, after hour price. So what's interesting to remember here is that the stock markets are closed today on Saturday. So all this data is really for Friday, right? So when it says today at the top there, it actually means Friday. So on Friday, NVIDIA went down 2%. And then after hours, it went down another 0.11%, right? So here you can also read all about this stock. You can read what is this company, etc. A little bit of data about the company. And then you will, news and everything. We can go through this, and if you have any questions, we
Some people maybe it's not like they don't know what NVIDIA is. Can you please explain this a bit?
Yes. Who knows what NVIDIA is? Okay. So NVIDIA is a company that produces GPUs. GPU is a graphic processing unit. That's what it stands for. It's a small little chip that we have in almost all of our laptops or electronics, where what it does, that processor, it tries to calculate exactly what color is this pixel going to be on your screen, right? So there's some code that runs on the GPU that calculates the color of the pixel, and it renders. So NVIDIA does a lot of those chips. Now, they're being used in AI training as well. Because in order to do this, for the whole screen, they need to calculate all of the colors all at the same time, right? If they were to do it one by one, we would see like, I don't remember it, but I'm sure, some people who live today, they can remember how the TV would just like show slowly, one frame at a time. It would like go across the TV and would show the picture, and then the next picture would show again that way. Then NVIDIA appeared, and they are used a lot for games. So when you're in a game, you need to calculate a lot of colors, a lot of what exactly going to be shown on the screen, all in parallel. And because they've done this processor infrastructure architecture, they're able to use that for AI computations. Because in order for AI to learn and know what it should give you as a response, you need to train it with a lot of data. And because you can do it in parallel, it just takes much less time. So that's why NVIDIA stock went from $20 to $140. It actually went to $500. They've split it. We can talk about that. But yeah, here you can see in 2007, they were 0.7, right? So 70 cents. Oh, you can't see it. Sorry, my bad. Here you go. So they were 70 cents in November 2007. Now they have 140. So a very valuable company. But thank you. What I want to take a look at is I want to go into trading. So when you click trading, when you go through the onboarding, you can choose if you want to trade options or just the stock, right? We haven't covered options yet with all of you on this course. I would absolutely love to cover options. I think it's going to be a little bit too much of a distraction right now. So we're going to stay on the stock for today and next week. And maybe we'll talk about options in August or July. So we're going to skip the trade options button, and we're going to go into buy. And the reason why I don't have a sell button is because I don't actually own any stock, right? I don't have anything, so the only thing I can buy, if we go back to S&P 500, what I did on Friday is I bought a little bit, so I can show you how that works. We can see the sell button here. So let's go back to NVIDIA. We'll say buy. Okay, amazing. So what next thing we see here are actually two things that I want to point out. This is something that Robinhood does that not every brokerage does. Like, I don't know if interactive brokers do this. I'm not sure if Fidelity does this. But what they do is what they say is like, how much dollar value do you want to buy of this stock? You can literally put in like, I want to buy $50. You can review this order, and then you can submit it. And it's going to be as simple as that, which is very simple. You don't need to know how much stock you're gonna own, really nothing. All you say is like, this is how much money I have, and I want this stock. I want to buy this company. And they do everything behind the scenes. I want you to understand what is happening when you do that. So we are gonna go into the second option, which is buying shares. So here, the first thing they're asking you now is how many shares do you want, right? And so usually you would put in any number between 1 and above, right? But it has to be like a full number, 1, 2, 3, 4, etc., integer number. You can see the market price. They tell you, okay, so right now NVIDIA costs $141.80, and how much it's gonna cost me to make this purchase. If I change this from 1 share to 2, it'll automatically recalculate the numbers. Again, very simple. What is important here is that Robinhood, not all brokerages allow this, but Robinhood allows to buy you a fractional share, right? So if you don't have enough money to buy a share, and let's actually go out of NVIDIA for a second and go into Berkshire Hathaway. So Berkshire Hathaway is a company that Warren Buffett owns, right? And 1 share of that company costs $730,000. So if you go and say, I want to buy a share, and you say, I want to buy 1 share, which is an option usually on every other brokerage, you have to pay $730,000. Okay. I see that Robinhood doesn't allow you to buy this share as a fractional share. Not all shares are fractional shares. So unfortunately, my example is not going to work for this. But the idea of the fractional share is that you don't have to buy the whole amount. You can buy whatever amount of money you have. And so we're going to go back right now to the NVIDIA. I think they have a list. There's usually a list of companies, a list of stocks that allow you to buy fractional shares. And so what I can do here is I can actually say, you know what, I don't want the full NVIDIA share. I want a half of the share. And you will see that the cost of that is only $71. Or I can buy a quarter of the share. So again, what this helps with is that it helps you start investing earlier. So you don't have to wait for a whole month or whatever to have $140. You can say, you know what, this month I'll try to buy 1 NVIDIA share, but I will buy it in quarters. And so I'll show you how to do that in a second. But that's what this platform specifically allows you to do. They allow you to buy fractional shares, and you can cut and slice it whatever way you want. Because of that, they were able to do this feature where you can say, you know what, all I want is just the $50, and they will do that math for you. So they will convert it into whatever fraction of that share is. All right. So those are 2 simplest ways to buy a share. I mean, of course, for that, you need to bring some money into the platform, but you do that through the deposit. However, there are more, I want to say more interesting ways to buy stocks, or more sophisticated. And the one that I found, and I really like this, is recurring investment. So you see, I'm going to go back. It's this one, right? So recurring investment. And what it asks is, how often do you want to buy this specific share? Which is really nice. When I was trying to do that for Sasha on Fidelity, I couldn't do this for shares specifically. What I had to do, and I'll explain. What we had to do is we had to say, okay, well, I want this much money to be moved to my Fidelity account from my banking account, and then I want this much to actually buy the share. The problem there is that there are fees, right? Usually there's like 50 cents, maybe $1.5 fee. So you have to adjust for the fee, and you can't really put, let's say you want to put all $100 into the share. You can't really put all $100 because you don't know how much fee is going to be at that specific time when they're going to buy it. So you buy kind of like $95 worth of share. And that really sucks. So with this approach, what's nice is when you go to the next page and you say, I want $50 of this share to be bought every whatever, right? So whatever, every day, every week, every 2 weeks, every month. So for example, if we go back to the NVIDIA example, we know that it costs $140. So I will say every week, buy me a quarter. So 140 divided, so like $35. And directly from my bank account. So take it from my bank account. Don't worry about the Robinhood account. Take it from my bank account and buy that share. And you can see, review this, and you will see that it will start on Monday. And you can actually change when you want this to happen. But now, I have filed an order successfully to start buying NVIDIA shares every single week for $35. No difference how much it costs, no difference what the fees are. This way I can automate my investments, and it's much better to do it into some diversified portfolios. But here's an example with NVIDIA share, just so that you all know how really simple it is to pick any share and set up an automatic payments into them. And I think it's beautiful for the dollar cost averaging approach. If you're investing for the long term, I would say this is probably the simplest I've ever seen. And over time, we spoke a lot about compounding effect last week, right? So with the compounding effect as well, over time, the more you put in money, now they start working. What's nice with Robinhood as well, or I mean, a lot of other companies do that. But what they do is, if we go into settings, let me see, invest in here. So, okay, first of all, this 2 of 2 active right here, recurring investments. At any point of time from my phone, I can go back and I can see what exact recurring investments did I put in. I can go and change them, or I can cancel them. It's all very easy compared with Fidelity again. I have to do it on the desktop. On Fidelity, you just couldn't do it on the phone. Like there was no way to do it on the phone. So that's one. Dividend reinvestment. So remember, when some companies pay you dividends, or some ETFs pay you dividends, what usually happens is they come as cash into your account. With this, as soon as you get some dividends, let's say it's $15 or $10, they will try to buy another, whatever fraction of the share they can. So really, it puts all of your money to work. It doesn't really waste any money on the fees. It doesn't waste any money from the dividends. Whatever you set, you are going to get to your goals much faster. Because of these small little changes, these small increments, they help a lot. Any questions so far? Yes?
There are after hours price change in video.
Yes.
How does it work?
Yes. So, okay. What happens is that, you remember those business hours, 9:30 a.m. to 4 p.m.? So before, like 15 years ago or so, sometimes there would be a war or earnings reports or something happens when those business hours, outside of the business hours, right? So overnight, something happens. And everybody is aware of that news, so everybody knows. At 9:30 a.m. when the business hours start, everybody is already ready to change their price. And what usually happens is their technical infrastructure just goes down. Stock exchange is overloaded, everybody's trying to sell or buy, and the price is just fluctuating so much they can't handle it. So what they've done is they've created this extending hours, really to help their technical infrastructure, but also allow people to trade outside of the business hours. So usually during these times, the volatility is much lower. Much less people actually trade, because all big companies, all hedge funds and everything, they trade during the business hours. And the second thing is, it might still not get fulfilled. So when we put an order for $35 of NVIDIA, we hope that it's going to actually buy it, right? And with this specific order, most likely it will, at whatever price NVIDIA is at, it'll just buy 0.005 of the share. So with extending hours, you can put an order, but if there is nobody else who is selling, or vice versa, that order is just not going to be fulfilled. So you can leave it until tomorrow, and that's why they've created this extending hours. because usually the earnings reports, that's why earnings reports for the companies, they don't come out during the business hours. They always come after the stock exchange is closed. Because if it came out during the business day, the volatility would be just crazy. So they try to do it after hours or before hours, usually after hours, so that people have enough time to process the statistics and prepare their orders, recalculate how much they think the share is going to cost, etc., etc. Are there any other questions? Sorry? Americans? Yes, a lot of Americans use Robinhood. Is that what you're asking? Yeah. So it's Robinhood is like there's a few. There's Robinhood, Webull, Interactive Brokers, Charles Schwab, Fidelity. There's actually like hundreds of these companies, but those are the most popular ones, and they provide usually the better services. They have better support, etc., etc. Sash, trying to answer your question. This is a regular account, right? So this is my regular account. There is this, where this is an IRA account. Remember, like almost a year, like 6 months ago, we were talking about IRA, 401k, and regular. So 401k and IRA has some rules on when you can get the money. With the general account, you can take money at any point. So this is a type, like what I've been showing so far, and any brokerage can open general accounts. So you can take money wherever you want. So what happens is, if you have your money in the stock, right? So you've purchased a stock, you can't just take the money out of that. It needs to be during the business. So first you need to sell the stocks, then you will get the cash in your account, and then you can withdraw that cash. You can move your cash into your bank account. That usually takes 2 to 5 business days, or it can be faster if you pay like $5 or something extra.
What about the tax?
What about the tax? So that depends on what exactly you do. Sorry. So that depends. It depends on a few things. If you're investing in a general account, that means that it doesn't have any tax advantages, right? So when you buy your stocks on, let's say, June 14th, so you bought S&P at $600, and it went up to $630. So you made $30, and you want to take them out. If you sell them on July 14th, in 1 month, those $30, they will be added to your regular income. So it's as if you made it as a salary. If you wait for 1 year until June 15th next year and sell S&P then those $30 are going to be a capital gains tax, which is 25% or 25% on the profits. So on those $30, you will pay 25%, and everything else is yours. I know that some stocks sometimes are qualified for like 12.5%, I think, but I'm not sure. Like, it really depends. But I know for sure that if you sell it before 1 year, that's your regular income. With options, because they have expiry dates, it's technically the same, right? If you hold them for 1 year, then it's a capital gain. If not, then it's a regular income. Usually, like, people don't really buy options for like 2 years or 3 years. They usually buy them for a few months. So with options, it's almost always just regular income. You had a question.
I want to ask about this regular income, the same
So regular income is your income. That's like your salary, right? The W-2 or 1099 that you have. If you sell your stocks before a full year, whatever you made, you pay tax, your regular income tax. If you lost money, you can file that loss. So let's say you put in $1,000 into stocks and you lost $100. and now you need cash, you sell them, you take $900 out. So this $100 that you lost, you file as your capital loss. And if you make $100 next year as your capital gain, then you can offset and don't pay any taxes. So with investments, if you lose money, it's still, you still can use that in order to offset your future gains. There is, of course, the inflation and opportunity cost that you're going to lose, but we can talk about that later. Basically, at this point, I think this would be a good segue from this. We'll come back to the trading and different types of orders. But I'm going to talk a little bit about the stocks and ETFs and what's the difference and like what is the ETF? Why? So I like to draw things. This is going to be our company, right? So this is a company. They have some shares. They have some shares. And here you are. And what you can do is you can go to the brokerage account. So let's say this round building is it's a brokerage. It's Robinhood basically, right? So this would be a Robinhood. There's actually, can I move this? Oh wow, that's amazing. Okay. So what happens is there is a stock exchange here. Right, so let's say this is a New York Stock Exchange. So what happens is that company comes to the New York Stock Exchange and they say, I have a great company, I have a lot of shares, I want to sell my shares to regular people so that they can buy and sell shares of my company. What they do a lot of audit, right? So they make sure their accounting is amazing in order to do that. But so what happens is the New York Stock Exchange says, okay, no worries, we got you. We're gonna take care of all the other infrastructure. We're gonna manage the shares for you, etc., etc. New York Stock Exchange doesn't actually sell the shares to us. They could sell them maybe to some big hedge funds. But what they do is they usually provide APIs, right? So the API is like this technology that allows you to connect to the database. And so New York Stock Exchange has this database of all transactions about all the stocks, of all the companies, of all the people. They manage all of that stuff. But then they allow the brokerage, so this is brokerage, or broker. So they allow brokers to access this data. And this way, broker can display all this information, like how much does the stock cost, what are the different orders, etc., etc. And that's where we interact with the broker. We can't really go to the New York Stock Exchange and buy shares. We have to use the broker that helps us facilitate this transaction. That's how we can buy, let's say Apple. However, if this specific company is a bad company and they go down, we pretty much lose all of our money. And so what people saw when this has been happening, like, I actually don't know when the first ETF appeared. Let's take a look. When was the first ETF? So that was 1993. So 1 year before I was born. And that was S&P 500. And so what happens is this beautiful country, America, they have a lot of companies. And what happens is that people buy different companies in their portfolio. But then Apple grows a lot. Coca-Cola grows a lot. Boeing goes down. All these different shares of companies that I have in my portfolio, right? So I have, let's say I break apart my portfolio like this. And each sector is different companies. These are all different companies. And let's say this is a very well-balanced portfolio. As time goes by, this portfolio becomes something more like this, right? So there's 1, 2, 3, 4 companies that grow big, and the rest that just lose money or don't really make any sense. Or like maybe they make money, but still as part of my portfolio, they take very small percentage. So right now, if something happens with one of these 4 companies, I'm losing a lot of money. So what I need to do is I need to rebalance my portfolio, right? Because this is all percentages. So when I start my portfolio, and let's say it's a portfolio of $100, I buy 10 companies for $10 each, okay? Then my portfolio grows to the point where there is 4 companies that cost $20. So let's say these are 4 companies. And then the rest, 6 companies also cost 20 divided by 6. So they cost $3 each. Let's say $3.30. So now my portfolio is unbalanced. Now 4 companies have much more weight in my portfolio than other 6 companies. What I need to do is I need to go on a broker account and I need to sell some shares of these 4 companies and buy the shares of other companies so that I make it even again, right? So then it's well balanced again. So before you had ETFs, people would do this all manually. They would go, they would buy, sell individual companies, all manually. So then the companies came up with this idea of an ETF. It's called, I think it stands for something like Exchange Trading Fund. What does ETF stands for? And yeah, Exchange Traded Fund. And as the name suggests, it's a traded fund. So it's a basket of all this stocks. So for example, S&P 500 is the 500 biggest companies in the US. And what they do is they take care of rebalancing the portfolio. So basically, what this allows you is to just buy this one ETF share, right? So again, ETF issues their own shares. So now you don't own the share of a company, you own a share of an ETF, but that behind the scenes means that you own a little bit of a fraction of each of 500 top companies in the US. So there are 2 things here. If you go to the platforms like this one, you will see 2 things. You will see the futures, and you will see the ETFs. So this is SPY. Let's go back here actually. So this is an idea, right? Somebody came up with this idea. They said, you know what, instead of people buying each individual stock or company of the stock, we are going to package this all together and we will call it S&P 500. This is just an idea somebody drew on a paper. But in order to execute it, you need some company to actively manage the ETF. And so if you go into Google and you say SPY ETF, S&P 500 ETFs, there is actually a lot of different implementations of this idea. It's the same as to say, I want to send a message to my friend who is in a different country. That's an idea. But I can use Messenger, I can use WhatsApp, I can use Telegram, I can use iMessage. I can use different implementations of this idea in order to achieve my goal. So ETF is an idea. The index is an idea. The ETF is an implementation of this idea. And every company tells you, you know what, our implementation is the best, you should buy us. So you can see that there is Vanguard, iShares, UBS. So all these different companies, ProShares, they have their own implementation of S&P 500 index. And so when you go into it, you will see that they have different tickers. Let's do the stickers. Here. So a ticker this 3-letter or 4-letter symbol is usually just a shorter name for a specific stock. And so each ETF that has implementation of S&P 500 index has its own ticker. And so all of these are technically the same thing. The most popular one is SPY. That's the one I'm buying. But there is all these different ways to do it, and you can choose whichever one you want. You can also take a look at who owns SPY. And it's going to be this company. But then there is also Vanguard S&P 500 ETF. And you will see that their ticker is WOO or VOO. So if we go here, and we pull this up, what you will see is that for some, VOO costs $548 versus SPY costs $597. So they have different price, but what's interesting is that they look exactly the same way. So if I'm looking at VOO and SPY, they follow the exact same price movements, but some of them can cost a little bit less, some of them can cost more. Under the hood, they're exactly the same thing. How's everybody doing? Lost a little bit? Or following along?
So when someone says I bought or sell, so SP 500, that's definitely ETF and nothing else, right?
Yes. Yes.
And I also heard there is such thing as Bitcoin ETF.
Yes. That's right. So again, in order to buy Bitcoin, for example, you need to have a crypto wallet, right? And you need to understand the transaction fees and the blockchain and where to store it. You need a wallet for it. So for example, I think a different way to answer this would be there is a gold ETF as well. Right, so if we were to go back to this platform, so this is the platform that I use to track all these different stocks. And one of them is, so here's you can see that this is gold. It's a spot to the US dollar. So this is how much gold costs right now. Right, so if you wanted to buy 1 ounce of gold, it's $3,400, $3,400. But there is a gold ETF. And again, it follows very similar price pattern, right? It looks very similar, $116. And you can find the other ones that might cost even less, etc. The idea of this gold ETF or Bitcoin ETF is that another company, they manage their Bitcoin reserves or their gold reserves. So this specific gold company, GLD ETF, there is a company that literally bought physical gold, and they have it. And when you buy a stock of this GLD ETF, you buy like a portion of whatever gold they have. And that is pegged to the price of the gold on the market. The higher the price of the gold, the more this company is valued, right? So if you're opening up your bakeries, if we go to that, you're opening up the bakery, let's say you have $50,000 in cash, and you don't have any equipment, no nothing, this is how much your company is worth. So if you were to buy, $1 billion worth of gold, well, this is how much your company is worth. So if you're issuing 100 shares, that would be, $1 billion divided by 100 shares. And so this is what they've done. The same with the Bitcoin ETF. Those are just like proxies in order to purchase the different instruments, which is another thing is the rates. I'm actually gonna, I think the SPG is an interesting one.
So ETF follows the same price pattern.
They follow the same price movements.
Possible that people want to buy more gold ETF and don't want to buy actual gold.
Yes.
What would be different?
Yes, a little bit. It could change a little bit, But what the company that manages that ETF does is they offset that by their resources. Because again, if there is a lot more people who want to buy ETF but don't want to buy the gold, when people buy the shares of that company and it grows, they take care of managing their reserves. So they would buy additional gold or sell some gold in order to facilitate that similarity to the price of an actual gold.
Thank you, go. Thank you.
Thank you. Oh no, it's 7. Yeah. All right. Let's get back to where we were, making trades. Okay, so we touched on pretty much all these topics today in a little bit of a chaotic way, right? So much less visuals today, a lot more talking. What I want to go back to is really the platform for a second, because there are a couple more things to do here that I want to show. And I'm going to go to S&P, and I'm going to go into buy, and I will talk about the last 4 ways to buy a stock or an ETF. If you don't use Robinhood, you use some other platform, you might not see the first 3 options. The first 3 options might not be available. So let's go to Charles Schwab for a second and say, I want to buy S&P 500. Right? So I come here, and you will see something much more complicated. There's a lot going on. So you don't really see those first 3 options here. You kind of jump right away into this one. And there is more going on here, but they've made a better job of simplifying this again. I want to talk about 2 things right now, the bid and ask. So you can see these 2 prices, and they are different. So the question is, which price will you pay when you're buying a share? This is no different from what we all experienced with the Forex trading, with currencies. With currencies, we do something similar. If we want to buy US dollars in Ukrainian hryvnia, we have to pay whatever 42 hryvnias for $1. But if we want to sell dollars, then all of a sudden we are only getting 40 hryvnias, right? So we get less for when we sell, and we have to pay more when we want to buy. The same thing happens with stocks. It's exactly the same. So bid means how much can I sell for? How much money am I going to get if I'm selling the share? This is the bid price. The ask price is how much the market is asking from me. It's how much do I need to pay in order to buy 1 share? And you can see that in Robinhood, if you go into this type of order, you cannot do the fractional shares anymore. You can see that there is no dot here, right? So if I go back and I say buy shares, I can put a dot here. I can put a dot. But if I go into a different buy order and I say, no, I want the limit order, for some reason I can't do I cannot do the fractional shares here. Okay. Another thing you won't see on Robinhood is a market order. This is something that you won't see here because it's basically those first 3 things are the market order. And I'm going to talk about that right now. So you can see the bid and ask here as well, right? So you can see bid is 597.30, ask is 597.50. Last size, 65. This is basically tells you the volume of the last bid or ask. So like how many shares are outstanding, haven't been settled, how many shares are people willing to sell or buy. It's very low right now because we are on Saturday. It's usually during the after hours and during the weekend hours, these numbers are all messed up. Like, if you want the actual numbers, we should do this whole thing during the business hours. But then you can see the action here. And so what they do is you can buy, sell, or sell short. We are going to go into the buy for now. And what happens here is these are the different types of orders you can do. You can see market, limit, stop, stop limit, and trailing stop. So if we go back to Robinhood, it's similar. The first three is market, limit, trailing stop, stop, and stop limit. So it's all very similar on all these different platforms. And I'm going to talk through each one of these. Why? If you choose market, what you say is how much do you want? Let's say I want 1 share. And you can see that there is nowhere for me to put the price. And the reason why is because I chose market. I said, you know what, buy me 1 share right now, whatever markets want. I'm willing to pay whatever. And then it tells you how much estimated amount is it going to be. So it says estimated because it's market. Because when you're going to press that button, if nobody is selling for $597.50, but somebody is selling for $198, it will buy that share. That's why it's very dangerous to do the market for both selling and buying. Because you might overpay, right? You can also see here that I can't change the day only. So this thing, I can't click it. There is also reinvest dividends, which is nice. So now we're going to go into the next one, the limit. The limit is a great thing, and you should at least use a limit order if you don't use the Robinhood. If you're using Robinhood and you want the fractional share, you just use those 3 first options, right? But if you want the limit order, you can't do the fractional. So be mindful of that. So what happens here is that you say how much do you want, but also you have to say how much are you willing to pay. And you can put whatever you want. You can say, you know what, I think S&P 500 is worth $5. The thing is, this order is going to go into the brokerage system, and they will try to fulfill it. They will try to find a seller who is willing to sell S&P 500 for $5. So if somebody is selling and they put the market price, the market order, they might sell you for $5. It's their mistake. And that's why you can see the time in here. It actually allows you to choose something. And there is a lot of options. The only ones, so the day only is during the business hours. If this order, if brokerage couldn't find anybody who was willing to sell S&P 500 for $5, and the business hours ended, it will cancel my order. So tomorrow, I have to come in and I have to do the new order. So this will be canceled. Day plus extended means during the business hours plus extended hours. Hasn't been fulfilled, going to be canceled. Good till canceled. I usually like this option a lot. And it will tell you by when. So what happens here is that I can say, you know what? I'm willing to pay $595 for S&P. Or even, I think in the next 6 months, with all the riots and all the wars and everything, it will most likely go to $560. And I say, it's good until it's canceled. And they give you something by default. The maximum they give is something like 3 months or 6 months. But you can change it. You can say, you know what, if it doesn't get fulfilled by September 11th, then you cancel it. Right? So these are all these different types of orders that you can put on the market and let the market know that you want these shares at this price by this time. There is good till canceled. So GTC is good till canceled plus extended hours. There's extended hours in the morning, in the evening. It's immediate or cancel. So it's going to try. If the limit price is not there, it's going to cancel. Fill or kill, I honestly don't know what that is. I have never used it. So. Okay, so this is a limit order. How's everybody doing? Yes, fine.
Is it legal to put order, for example, $5 and wait until someone makes a mistake?
Yeah.
It's legal.
It's legal. Sometimes brokerages, they can come back to you and say, you know what, that was a mistake. We're going to put the shares back. They could do that, but it's very legal. Yeah. There are sometimes the stories like that you will hear about, that somebody made a mistake and they sold it $5.
after you saw Robinhood, are you going to switch to easier interface or still hardcore?
No, I'm probably going to use Robinhood for my passive investments. I like the hardcore stuff for, like I do a lot of option trading, right? So if we were to go, I haven't actually looked in options on Robinhood yet. So, I mean, it looks pretty simple because usually what options look like, I actually don't know if I can, yeah, here. I have to apply. Okay, so for the options you need to apply, I'll go here. Sorry, I'm not going to show you how much I have. So if I go into Snapchat, for example, and I go into the options here, this is what it usually looks like. You have all these different days, and you have, and then you go in, and you will see all these different numbers. And so it makes a lot of sense, but we'll get to that at some point. So with Robinhood, it's really nice. I like how simple it is, and I'm going to use it for my passive investments. I'm just going to set up all these recurring payments and purchases of the stocks, and that's what I'm going to do now. So going back to the Schwab, are there any questions about the limit orders? Yes. 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 So this applies for both buying and selling. If you're buying, the limit order is what's the lowest you can pay? And when you're selling, it's like what's the lowest am I willing to take for this? So if you have S&P 500, then you can say the smallest I'm willing to sell it for is $605. And so until the price is at $605, it won't sell your shares, right? So it works both ways. Okay, we can take a look at that. But yeah, some brokerages, this part depends on the broker. No. It's very, very close. It could fluctuate just a tiny little bit. Usually it's very close, and the reason why I'm saying that is they use the same APIs. They use the same APIs from the stock exchange. Why it can be different is the timing of that. If it takes the information longer for them to be received, then you might see it with a little bit of an offset. It's going to be like cents. Yeah. At this point of time of the technology, it's very little. Before it could have been like, you could do some trades and stuff. Okay, so you're saying if you are selling and somebody else is also selling.
They set up the price.
Well, so what happens is it's like on the market, right? On a farmer's market. You come in, somebody is trying to sell you peaches or tomatoes. And they say, you know what, this is cost $6 for a bag of tomatoes. And you come and you say, well, can you do 5? Right? He's like, what about $5.75? And you start negotiating. And then at some point you find the same price and you're like, okay, $5.50, I'm willing to do it. He is agreeing and you're agreeing. And so the transaction happens and you buy, or they sell a bag of tomatoes for $5.50 and you buy that same bag for $5.50. If you what?
Even if I set up the price like this,
Well, if you set up the price like this, it means that you come to the farmer's market, you set up your shop, you put tomatoes, you put a sign that says $6, and you leave. There is nobody to negotiate with, so whoever wants to buy at $6, they can buy them. If they don't, they can just go away.
the whole amount.
The whole amount.
Yeah, that's what I wanted to ask.
Yes.
It was sold partially?
Yes, correct. Yes, yes, I see what you're saying. Yes, yes, yes. That's right. So if you have 10 shares that you want to sell at $605, and somebody comes to the market and they say, I want to buy, but only 3 shares. I don't need all 10. It will sell 3 of your shares It will say that the order is partially filled. Yes, the order is partially filled, and it will keep looking for more buyers to buy at 605.
How often do you check your account?
Every morning.
Every day?
Every morning, yeah. You want to know it because I also do options. So I have shares, and if they go up, I might not check the actual account, but at least I check this app, right? So I check the prices every morning when I wake up. I check it every day because if something that I have goes up, I can sell some options and make cash on that. There are ways to make money without selling my shares, but I'm kind of like waiting for a good moment to do that so that I can maximize my profits. All right. So the next order type is the stop order. And what this does is, again, you want to buy. You say, I want to buy one share. And here's what happens. Here I specify, let's say right now it's 597. I'm going to say 598, I think, when I buy. When I'm buying, I want this order to go when it's lower. So it's going to be 596. So what's going to happen here is that the broker, it's going to wait for the share price to go below the stop price. And at that point, it will trigger my order. So it won't have this order until the price is below that number when I want to buy, or higher that number when I want to sell. And it will buy at the market price one share. That's why you have a stop limit where you have both. You say, okay, well, when it goes below 596, you try to buy it, but only at $595. So you can kind of like combine these things together. And I'm going to go into the trailing stop. I didn't quite explain it in the video. But the idea here is that you can put in points or percentages. And this order is going to follow the price. So let's say you have some shares. You have S&P 500. You bought it at $600. And you want to sell it, but you only want to sell it when it goes below more than 1%. So it's like your risk margin, right? So you bought at 600, but if it goes 1% down, you're like, this is too risky now. I'm losing $6. I don't want to lose any more. I want to sell this share. So you would use this type of order. And what's nice about it is that if this S&P 500 goes up, and it goes up 10%, and then it goes down 0.5%, then it goes up another 2%, you won't sell. It will. This 1% trail, it's going to kind of like follow it. And I'm going to show it in Robinhood. Again, they've done a pretty good job here. When I want to buy, for all these orders, oh, are they not going to show it anymore? Oh, here you go. This is stop limit. This is trailing stop. Ah, I want that. Sorry. Yeah, there you go. I can see it. Here. So what they show, I'm going to do that again. This is how it works. The stock price and the trailing stop price. This is for buying. So this is not for selling. This is for buying. So what it says is, whenever the stock goes up by 1% or 2%, buy it. Which means that the stock is starting to grow so much that you want to participate in that. You want to jump into the stock and you want it to keep growing. But if it falls down and grows a little bit, it still won't buy it until it actually hits this threshold of gaining like 2% or 1% from any given point of time. It's pretty cool. It works amazing for risk management. I know there's technically 5 more weeks of these lessons, so we would get into the risk management, and we would talk about that, and we'll still talk about it in the August. Because once you bought the shares, you want to, you still want to, if you want to do active management of those shares, you want to track what the price action is doing And if it's doing too much, if it's going down too much, you want to exit the share. You want to exit the position because it might keep going down. It's one of the ways to do it, right? Of course, there is a way to just keep buying more in dollar cost averaging. It all depends on the strategy, it depends on the time and everything. But usually these more sophisticated orders are incredible for trading or for much shorter investment time frames. Okay, I think we've covered all the types of orders. Yep. What kind of questions do you guys have?
How to set aside money for those things?
Set aside money for what?
For recurring payments.
For recurring pay. Okay.
For budgeting. No.
Sure. I would say it's basically either using the recurring investment here, and then you can based on your budget that almost all of you did, you can set every month, let's say, and then you choose how much you want to invest. Right, so we went through this, and you can choose from where. What I like about Robinhood is that you can choose it from your bank account. Fidelity only allows you to choose the second option here, right? Which means only from the Robinhood account. But then I have to make sure that it has enough money to buy that. I don't want to worry about that. So they've done this very nice job of adding my bank account there so I can just choose it and not worry about having enough cash on my Robinhood account. So
How to split between, for example, the money in several segments versus buying
that goes into proper budgeting, really. So when you budget, and we spoke about this last week. So when you budget, there are a few rules of thumb, right? There are a few kind of really good rules that if you follow, it's much easier to decide. The first thing is, let's make this huge. So the first thing, you don't want to have credit card debt, right? So that's number one. There's no credit card debt. We spoke about this a lot last time, because you're paying 25% to somebody else. You're not going to make it on the stock market. If you have credit card debt, then you shouldn't be investing money at all. You should pay off your credit card debt. Other debts I'm not going to touch today. We can talk about the house and the car and the student loans and everything, but it really depends on the percentage that you pay. If it's less than, I would say 6%, then it's fine. You can invest some money. If it's more than 6%, then you should pay off this debt as well. Then you want to have an emergency fund. And emergency fund is usually 3 to 6 months of expenses. And again, if you're doing budgets, you will know exactly how much is that for you, right? So let's say you spend $5,000 a month. That means that what you want to have in your accounts is somewhere around $25,000 saved. And so this will go into your savings, right? So these money you have access to at any point. You don't need to sell shares. You don't need to withdraw money. You have it at any point of your time, but they're also on savings, which means that they might be making you 4% annual. So that's one thing. After you have emergency fund and no debts, and you still have some leftover money, then you're ready to invest. And we spoke about different ways to do it on the budgeting class last time. You can pay yourself first. You can appropriate some amounts of like 20% into the investments. I would say, again, your rent or mortgage or housing should be 30% of your income, up to 30% of income. And that means that you still have 70% for everything else, which could be, I would say another 30% could be clothing, food, basic needs. Then you can have, 10 to 20% fun, sports, etc. And then the rest is 20 to 30% you put into investments. So that's what I would do. That's what I do. Whatever that, right. That's how I would decide if I'm ready to invest money and how much, right? So everything up to this would be great, and then you use Robinhood or whatever platform you use to set up those recurring payments.
For example, if my salary is $10,000,
Mm-hmm.
how much can I invest?
Yeah, let's do it. So if you have $10,000 a month, that means that $3,000 would go towards housing, $3,000 towards food, basic needs, $1,000 to $2,000 towards, hopefully it's studies and maybe hobbies, whatever. And then the rest is really between $2,000 and $3,000, depending on how much you spend, would go into.
If I have
If what?
two kids.
2 kids. All right, let's redo it. Then let's say you spent another $3,000 on the kids' needs, right? Kids' needs, which is usually like daycares and clothes and food. Like, it depends on how old they are. Some ages of the kids are, they are much more expensive than the other ones are less so, depending on the school that they go to, etc. But yeah, you would still save $1,000, hopefully. You would just have you'll have more fun with your kids. Let's put that here. Fun with kids. Yeah. So if you budget, you'll be able to see it clearly. How much it goes where, and that's what we spoke about last time, right? It's like the role of budgeting to begin with is to just be aware of where your money go to. And only then, after you've done it for 3-4 months, that's why the homework was to do the last 3 months of budgets. Because 1 month is not enough to know your patterns. If you do 3 months at least, 6 is better, 1 year is even better. Then you can start planning. You can start, thinking about where exactly can I cut costs, and I start saving and start investing. What other questions? Who of you knows exactly what to do to start investing today? Raise your hand. Like, you know exactly where to sign up, what to download, where to put money in, so that if you come home today or on Monday morning, you open up the app, you know exactly what to do to buy your first share, to buy the S&P 500, let's say.
So we can buy we can buy everyone today S&P 500.
You can put an order to buy S&P 500 on Monday, right? So you can't buy it today because it's closed, like the supermarket is closed. But you can put an order.
But the one you say, are we talking, we're going to talk about what exactly it's about. Just for example, this S&P Live, I already got it.
Nice.
But I just wondering, like, what kind of other stocks make sense, or where exactly you need to invest in, or so I will target this kind of model?
Next week. I'll talk about that.
Got it.
Let's talk about consequences,
So we will talk more about the portfolio balance and like which specific ETFs to buy, how much, etc. Like, we'll talk about the U.S. market, small caps, large caps, international markets, some gold. I think right now it could be more important to buy some gold. We'll talk a little bit about crypto, like just how to structure the portfolio. Consequences for what?
Yeah. Provide some kind of form or something.
Yes, I think somebody asked it. I think Elena.
Okay. Yes, you told us about which kind of like about taxes generally. Like,
Yes.
So what about excess for how should I use that? They're going to send it here.
To file the taxes? Yeah, so what you're gonna do is you usually are gonna get this form. Let me see if I can find it for myself.
And we are going to discuss this later.
I didn't quite plan to do it. I think it's like it would be nice to like talk to CPA, right? I can just talk about what my experience is was doing it, but I need to find it first. Yeah, here you go. So this is the platform that I use up to this day, is Tasty Trade, and so what they do is, they basically augment all this information for you, and you can see like total ordinary dividends, qualified dividends, and then if you go lower, they put all transactions that you do throughout the year, and it could be a lot, it could be a little, and they accumulate all of your gains or losses here. And that's what you pay taxes on. They can also qualify these gains or losses. I don't know which year this was, but maybe 2024. So what I was trying to do with Intel here, I don't know if, are they going to have it somewhere? Maybe. No, it doesn't look like it. So there is such a thing. So yes, every platform gives you this type of document, and you give it to your CPA, and they know exactly what to do. There is such a thing as a wash sale, I think, tax. Yeah. So there is such a thing as a wash sale tax. So remember I was talking about how you can buy a stock, you wait for a year, and then you can sell it, and that will be a capital gain, not your regular income. What I tried to do this year, I thought it might work. So I had this share, and I tried to sell it on like 30th of December. So it's still 2024, right? So that I can claim some losses against my gains on other stocks, so I don't have to pay taxes. However, I didn't know about this wash sale rule. So I've sold it on December. I waited until like January 5th, and I bought it again because I still want the share. I just want to capture the capital loss. Turns out that they have a rule that I can't buy the same share back in like 60-day period, because that looks like exactly what I was trying to do, that they actually don't allow. So they don't allow you to sell the share just to harvest the capital loss, and then buy back the share again in the next year. So they track that, and if it's the same amount, the same share, like everything looks the same. They'll just say, you know what, we get it. You try to do that. That's a wash sale. You can't do it. You still have to pay capital tax or income tax on that income. We will remember that you have some loss here, and we will include it into the gain that you're going to get from this share later. So they still going to recalculate everything, but later on. That's just one, funny rule to know about. All right. So we spoke about the market making trades. We talked a little bit about stocks and ETFs today. How to buy. We opened up an account. I showed you how to buy. The simplest way to buy right now would be to go to go here and specify how much shares you want or how much dollars you want. I would say that's something I did, and I would highly recommend to everyone. It's just basically doing the recurring investment into S&P for this week, and next week we'll talk a lot more about other ETFs, other kind of gold and everything else, and we'll see how we can rebalance this. So we'll move from just an S&P, and we'll make more recurring investments for other tools as well. Okay. So that's when we will talk more about what to buy. as you can see, the next 2 lessons, now it's next lesson, that will be more about the well-balanced portfolio and when to buy. And we opened an account. Any questions that anybody has at this point?
One more. So SPY, like MSP 500, it's almost the same, right?
SPY and S&P 500. So yes, again, S&P 500 is an index, right? It's like an idea, because for example, there's many different indexes. There's many different ideas. Some people look at small capitalization companies, small companies. Some look at technical like technology companies. Some look at medical and pharmaceutical companies, etc., etc. All of these are different ideas. You're like, okay, I think, right now the war happening everywhere in the world. So why don't I buy 10 to 50 biggest companies that produce weapons? SPY is an actual implementation of this idea, right? SPY is like, okay, there's an S&P 500 that somebody came up with, and SPY is the exact implementation of that. So you can only buy SPY, or you can buy VOO, you can buy all these different shares of an idea of S&P 500. All right, I think I'm going to close it here today. If you have any more questions, feel free to ask. All right, thank you, everyone.